Hey, what's good, guys? Hope everyone's having a great night. I just wanted to get out ahead of this NWOG video. I know I've done one previously, but I wanted to kind of go over it again and just have it kind of be refined as something you guys can add to your trading repertoire. But I did want to kind of preface, I think this is what I'm going to do moving forward in terms of videos. I know I just told you guys I got a Mac. I think I'm just going to use that for trading execution and just solely trading. And then I'm going to keep my PC kind of off on the left-hand side for content creation only. I think it's going to help with the viewing experience. I think the quality is a little bit better, a little bit easier to edit my videos and kind of do things around that. So quality should be a lot better. I know I had some people complain about that with when I would try to do this on my Mac. So yeah, just wanted to kind of address that as well. But yeah, very easy thing to add. Really, I only look for NWOGs when we have clear gap targets, right, to the downside here, and or it could be the upside, right, if we kind of inverse this chart. We're expecting this to trade up into this gap here, right, which is going to be this white line. I'm just inversing the chart, by the way. Actual chart looks like this, but right, we're kind of coming down into this area here. But the thing is, with NWOGs, we always want to tie it into data. So my favorite weeks to trade and look for an NWOG, right, which is a new week opening gap, which means from a Friday close to a Monday open, we're expecting either a gap up and distribution to come back down into the gap that it left behind, or a gap down, an accumulation, and then they grab those shares, right, and they try to sell them higher back up into the gap that was created on the gap down. Should make sense from that perspective. But yeah, we're looking for typical 2 to 3 higher high distributions or 2 to 3 lower low accumulations. Very, very simple concept here. So this week, and like I said, my favorite weeks to trade it are JOLTS and NFP, which JOLTS is a jobs report, NFP is non-farm payrolls. Those are usually the most manipulated weeks for NWOGs. It's really great during the FOMC week. It's also great during PPI and CPI week, right? So during these like 3 kind of catalyst weeks with data sets, if you guys don't know how to get to your data sets, if you're on TradingView, it's very simple. You click the plus sign, go to calendars, and you guys can really kind of go through this and plan out your week ahead, right? You guys know I don't usually like to trade Mondays because there's no data on Mondays, right? Monday is usually a follow-up from the weekly candle. This is a digestion day. This is the day where we'll really start to see if we gap up during like an NWOG week. We'll see preliminary stages of some kind of exhaustion if we gap up, or if we gap down, we'll see kind of like base out a little bit. We really don't start to see data manipulation until we start to see data, right? And that's the volatility that we're looking for to really drive price and facilitate it towards the spots that we're hoping for, right? So this was a good example here. Right, if we kind of look at the gap that we had, right, and we'll get rid of this here. We just know that they were baiting the gap fill here at 585, so just keep that in mind. But this was the closing price on, oh, I hate when it does that. My bad, guys. I have it open on my Mac, so I might do that from time to time. But from, oh my God, what is it doing? From Friday. Okay, where's Friday? Here you go, Friday. So Friday close is up here. Right, so that's the close, that's the beginning of our NWOG. All we're really looking for from here is, are we gapping up or are we going to gap down? And in this case, we're expecting some kind of movement to drive buyers into a gap up, right? Distribution and then selling and simultaneously bidding back down here, right? We can't have price move without two sides to things. We need sellers or willing sellers that are willing to buy people selling, and then you need people looking to buy lower, right? And those two go hand in hand to kind of force price down. So NWOG is technically starting at 591.95. What do we get as soon as we open on Monday, right? We do have a slight NWOG here. Now, it's also important to tie in structure into this. I always talk about how important structure is. So you could have done like the left shoulder here. You could have looked at this lower high and really looked to get any exhaustion here and risk going into 60250. But the NWOG technically starts, right, if we take a look, and if you guys don't know how to tell by candles, right, it's very simple. I mean, the first thing you can always do is hover over the candle itself. On the upper left-hand side, as you guys see here, it'll tell you open, or I'm sorry, O for open, H for high, L for low, C for close, right? So we're looking for the open here, right? So the open is at 596.27, which is right here, right? So our NWOG is already established. We're looking for this to kind of distribute against this lower high at 602.50. Now this is where we also have an edge, and I try to post this as much as I can. TradingTix is very, very helpful with this on looking at kind of under the hood distribution or accumulations, right? We saw multiple sell orders off of like the 601 spot, 600 spot, where they were selling orders, and we were expecting some kind of distribution leading into this area here, and people likely buying the gap up on good news, right? Good news is usually there to bait you, and I don't want to always say that because it's not necessarily always true, right? There's always going to be instances where it's not, but gap ups I'm usually cautionary of, and obviously we ended up pushing up towards the high of 599.70, and then we started to come back down, right? Now this is important where you can start to lead into a short, kind of build a position out into your levels, have a clear risk at like the 602.50, and kind of just go based on your own risk, right? I mean, we should always allocate a small position of our portfolio for any position. Shouldn't be tossing in 100% of your position into these things because they don't always work. And that's for any trade, right? I mean, you guys can't expect everything to always win. But good example here where we had our open at 596.27. We're expecting price to kind of push up and then fizzle out up into our levels of sells, right, which were at 602, some at 601.50, and then we're kind of looking for this to trade up, right, and then sell back down into the NWOG by end of the week, right? And data is usually going to be the forefront of that. Now, I usually expect this to play out towards the end of the week, right? I usually like to see a slow grind up into our levels, and then by Thursday, Friday, where the big heavy hitters come, right? So usually like NFP on Friday, that's usually when I expect the reversal. In this case, we had JOLTS report on Tuesday. Keep in mind it was a shorter week, so we might have seen an accelerated distribution, but we really filled it in the first day here, right? And on top of that, we saw data continuation, right? So on Friday, NFP came out and we started to continue lower. So this was a small example here, right? And if we kind of jump back to the beginning of the week, and I'll mark this with V really quickly, so our blue line, this is what I mean when I'm talking about price fizzling out. You guys can clearly see we had a gap up, right? Our NWOG was like right around this spot here, so the Friday close was actually here. I don't know why I did that. We'll pull this over, we'll grab this really quickly, and hopefully these lines aren't confusing you guys. I'm trying to make this super simple. That's kind of what we're looking for, but we gap up, and what do? We start to press up on decreased volume. This is always something to note. We start to press up on decreased volume. We have our high right here, right? And take a look at the spread. I always talk about spread in terms of exhaustion. We're moving up on declining volume, which is our sign 1, right? In sign 2, we end up reaching our peak. We have one of our smallest spread candles. Spread, once again, meaning the distance between the high and the low. Take a look at the distance between this high and low, right? I mean, the distance was 598 to 597, so about $1 of range. And you guys can see it's consistently about $1 of range until we get to the peak here. Well, some of our lowest volume, as you guys can see down here, right? Some of the absolute lowest volume right around this spot here. And what was that to be exact? Let's right-click this. We'll put on volume really quickly. So yeah, 671,000 for a 15-minute candle is very, very low. And do we short this? Like I said, you could be building a position, and that's actually kind of what I was doing. I started 2 contracts or so. Kind of leading into 602, I was building out what I thought would be a really big position. And then, of course, it started to sell down, so we're getting an immediate reaction. A lot of people will tell you, like, oh, I caught top, I caught bottom. You really don't want to be that guy, right? Because you never know where a bottom could be. It could be a bottomless bottom. It could be a topless top, right? It can keep going and keep going, and that's where people really get in trouble, falling in love with a thesis or some kind of game plan. Really what we want to see is a top form, a breakdown underneath a level and a retest of that level, or some kind of lower high that fails to get back to that exhausted top, which signals further exhaustion, right? It's pretty simple. And I really honestly kind of choked this. We gapped up again on Tuesday, right, where we pushed up. We gapped up immediately. Following that, the first 2 bars following the opening print, right, were very, very low volume. 860,000, 1.39 million. That's really low for an opening kind of push, right? So realistically, this was my sign to kind of add more, right? And then I could have extended, or I guess tightened up my risk, right? I could have had risk now being this exhausted top and started to add into this this orb high here, which orb high is opening range breakout. I could have just simply have added and used this whole area, right, from here to here. It's kind of like my zone to continue to add if it kind of pushed into this one, and then really just risk that high, right, and kind of extended down my risk. But once again, very simple. This is a structure trade where we broke down underneath our kind of like our opening print from Monday, which is our NWOG, I guess, open would be how we label that. And then it broke underneath, and really I could have just added here, I could have added on this breakdown, and really try to get aggressive for this to fill the NWOG, right, at 591.87. We broke down underneath that, and we even had another opportunity. I kind of, once again, I don't want to say I did a perfect trade here. It's something you kind of have to get accustomed to with looking at and being comfortable trading this, especially even after it fills, right? Because once these NWOGs fill, you kind of have a trend, right? You kind of have a trend, and you guys can clearly see we had another gap down below here. So you can just take this bit by bit and keep trading this from gap to gap using a trend. But we kind of had a breakdown, an LPSY right here, which is the last point of supply. It retested again and then obviously failed, and we're getting consistent lower highs, right? We had a high, a lower high, NWOG filled, a lower high off of the NWOG, right? So that's kind of a sign of weakness here, and then we continued for a lower low. We pressed down into this 584 gap. What do? We kind of pressed up again and really just kind of consolidated without breaking back above 591. And then what do we have? Another gap down. We broke down. Obviously, we haven't filled the 576 gap just yet, but then we pressed up into this spot at 584, which was our kind of our bull gap now, which is acting as a resistance, and once again, lower high, right? So it's important to tie in structure, tie in volume, and understand trends can continue even further than some of our more immediate targets. That's why it's important to hold runners. But yeah, this hit 584 and then kind of pressed down again. Now we're kind of nearing the bottom here, right? So you guys got to think about this from a risk to reward perspective. If you're looking to go short here with a fresh position, is this the best spot that you can be adding into puts, right? They're going to be more expensive. You're right near support. We're kind of right at 576.74, so that gap is essentially filled. Take a look at the lower lows here, right from here to then take a look here. I did that really poorly. Let's take a look. We'll kind of connect these if we can, right? So this low to this low is probably like what? Actually, let's draw lines here real quick. Take a look. So I want to show you guys the decreased spread, or the incremental lows, right? So 580.91 to 580.50, so a 41 cent low here, and then from this low to this low, right? A little bit deeper, but once again, we kind of close back near the previous lows. So you guys can see each new low is getting smaller, and the fact that this one dug a little bit deeper and then closed right back near the old lows, this is kind of looking like an accumulation. The volume's pretty high here as well, and it's really trying to bait new shorts to get, you know, kind of, especially uninformed shorts, to try to get this last 0.70% or so and overextend themselves for a short. When the real trade now is long side, especially if we see some kind of confirmation. And that's where it ties into next week, right? I want to bring this up. Let's get rid of this. Next week we have a ton more data. So Monday, I would like to see kind of a gap up, right? Or if we kind of sell down, we want to see some kind of bull gap now to the upside. So you got to think, let's kind of switch this around really quickly. Where's our close? It's right here, right? So if we end up gapping down to 576, where is our NWOG kind of target, right? Just to start a trend potentially. I already have it marked, so we're cheating. So it's 580.49. So we'd be looking for this to pop up into 580.49. If it can base these old lows, then you can start taking this back up, right? And like I said, kind of use your smaller targets to kind of see if you can get a trend build out. And this is where it gets very fun, right? And this is where I'm also getting my target of like 590-ish. You guys can see we have 589.42. If we can pop back through, then we have a couple progression gaps that we can trade towards from here to here, right? But for the most part, there's an unfilled gap at 589.42. So if we can get some kind of breakdown to 576, we gap down, everybody's bearish, maybe it comes a little bit underneath this spot, right? It kind of sells under and then it reclaims. We have a potential NWOG trade in terms of an accumulation, right, where these big guys are kind of buying the shares of people that are not diamond handing, right? They're not holding their positions. They're selling out because they're like, oh God, this is going to keep going down. We get that change of hands where the weak hands are selling their shares. The informed buyers are buying these, right, and they're putting their sell orders higher. And prices, once again, an auction, it's going to trade towards those sell orders. And we have an easy path where this can break into the NWOG at 5. And this is where I want to get my lines all situated. Back to like 580.51, I believe, is the level. Yeah, 580.51. That would be our NWOG. If we can get back above the NWOG and base that, then we have a clear trend back to this this bear gap at like 589.42. Hence the 590 level, right? So very, very important to kind of tie all of this together, and using NWOGs to your advantage during these high, I would say high volatile or heavy set data weeks, right? To kind of use them to your advantage. This is where I also bring up like TradyTix. TradyTix is amazing for this. So if we go to TradyTix, we go to this here really quickly. Hopefully you guys can see. I'm going to pull this up real quick. Okay, you guys can. Just wanted to make sure. So really excellent tool. I don't always use this. Let me get off of this. Let's go here. Dark pool. You guys know that I've already pointed out they're lining up sell orders. There's 37 prints right now. Once the market closes, we really don't have an eye on this because we don't have data hitting the exchange anymore. But 589.7, it's 5.1 million currently at 137 shares. Just something to note. So they are lining up their sell orders here. So if we see a gap down, this is the area that we can expect the market to kind of gravitate towards and facilitate towards, and we have a pretty easy pathway right back up to that that 590 spot, right? So something to just keep in mind for next week, and kind of using things to your advantage in terms of not only data on TradyTix if you guys have that available. Like I said, I do post that for you guys, but also using the chart to your advantage and understanding risk to reward, understanding how big money sets up their trades in order to get liquidity for the upside or the downside, right? And how they use the data here, right, to kind of bait buyers or sellers to overreact to one side, right? I always see people in the chat like, oh, what was the news today? Was it bad? Guys, that doesn't really matter. That's kind of how they want you to react. They want you reacting to data in order to get certain fills. And in the lower low sequence that we're seeing here is very, very suspect. So just something that I'm watching for next week. I recommend trying this, during those heavy data weeks, right, or heavy set data weeks, and kind of seeing going into a Friday or from a Friday going into a Monday that NWOG and seeing where we open. Do we gap up? Do we gap down? And kind of understanding how these like to deliver towards their I guess corresponding gaps, right? So that's all I wanted to show you guys really quickly. I wanted to get this out there so we're all kind of on the same page. And yeah, that's all I really want to do. I want to have us kind of be prepared for next week and maybe test this out. The back test on this is fantastic as well, so I highly recommend using this to your advantage. And just kind of like prefacing this, right? If we do get a bounce up, right? I mean, this is still a great range to see a lower high, a break underneath this gap, right? And then I think we can potentially trade even lower, right, down to this this 560 spot, right? Because this is an unfilled gap as well. So this could, once again, kind of play into our sequence where we have a lower high, a lower high, a lower high, right? And we can continue to keep this trend going even further than what I said before, right? Where we have clear targets, it can continue down in some of our lower targets down below. So yeah, just wanted to kind of keep this in mind. Hopefully this helps you guys as well. I have a previous NWOG video. This is just a more recent example. We did catch this, albeit only with 2 contracts, so it wasn't the craziest size that I had on this one, and that's okay, right? It didn't really get to the exact spots I wanted it to. Remember, I was looking for like 602, 601, and remember, these trades don't always have to go exactly to the spots. That's usually why I'm a big fan of starting light size. You guys will see I'm like, okay, I'm taking a little bit here, I'm taking more here, and I'll add on some confirmation. Absolutely did the right thing, but I missed a couple opportunities with some of the smaller time frame lower highs being here, another one being here, right? Another one kind of like, I would say here, right? But it is what it is, right? I'm not a big fan of shorting into gaps because of the potential for a gap trap, right? And kind of using this as an example, right? Remember, the gap was technically here. I'm not a big fan of getting stuck in a gap right here because you can see short squeezes off of these And yeah, we just got to be a little bit careful with this one. But hopefully this helps you guys out. Definitely recommend kind of adding this to your trading arsenal. It is very helpful. And yeah, that's all I wanted to point out real quick. Hope you guys have a good night.